Welcome everyone to the Kendall Report. It is Tuesday night and it's almost midweek already. I don't know how this happens. It's pretty bizarre. Shouldn't take us long to get through tonight. I literally can't find anything to talk about. There's nothing going on. Markets are locked in a sideways range. We traded down right to the support levels that I talked about last night, bounced out of there. Here we are again looking at ES at 40.15. It's like nothing happened again. It's like Groundhog Day almost, right? So we're coming to the end of this month and trying to wind down. And as I've been talking about, we've been locked in this trading range for really, with the exception of a little bit above and below, going back to a year ago, last May. So we have not went anywhere for a while. And so I thought it'd be fun to title this video tonight, Can the Markets Break Out? And I would tell you as we go through, at least it does not look like at the moment. There's always something for a surprise. I still have this sneaky suspicion for a bit of a squeeze in the next couple of days. We'll see if that happens. They certainly weren't interested in pounding them down much as we came through the range today. But I have virtually no notes. Usually I have a full page of notes. I have very few notes tonight. So I'll talk about a couple of things that we have that we can talk about. The interesting thing I would say from my viewpoint is that markets are continuing. They're trying to keep this banking thing together. It was perfect that I said last night's video was what banking crisis, and they come up this morning and try to put out that Deutsche Bank is going to roll over and the credit default swaps are trading higher and all this stuff, and the stock's down 11%. They managed to use that story to get the markets down, but they can't break this thing. And they've thrown everything in the last 3 weeks at this market to try to break it, and it won't break. It's just not going to break at any point there. So I think we're like I said, I think we're going to be able to move higher toward the end of the week. Next couple of days will be important, but you'll see here in a minute, all the technicals. I mean, it's flatlined. It looks like the patient is alive but not very active, and it's interesting that as we, like I said, as we finish off this month, I have reasonable hopes for the month of April, but we're going to have to, like I said, I'm trying to find something to talk about here, and there's nothing here. So I apologize from that viewpoint, but we're continuing range bound. I'll talk about some parameters when we go through the technicals and what might be something to break out. But for the most part, we're just not seeing much of anything. I mean, yesterday, the NASDAQ was down a little bit, composite was down, but everything else was, really just down, basically flat. And it was interesting because that last hour and a half, 2 hours yesterday, markets rebounded. If you were watching, you'll see that we printed almost exactly S2 yesterday and rebounded and managed to finish right around 4,000. Like I said, we're back at right now 4,015.75 on the E-minis. So I guess let's just get through and get into this thing. Maybe I'll spend some more time on some of the technicals tonight and see what is out there. But everything's pretty drab right now, folks. Maybe this is a sign in itself that we're about to make a turn, just that it's quietest before the storm. I remember one of my old mentors, Chicago Board of Trade, 1979, said, never sell a quiet market. And this is about as quiet as it gets. In spite of the news stories, we live in such a different time than we did then, where rumors spread very, very slow there, and they back in the day, so to speak. And now with Twitter and everything else, everything flies and markets respond instantly. Everybody has the mouse and digital trading, and so it's a much different world. So let's go ahead and get into the database, see what's going on there. Actually about the same, not too much, but let's go ahead and get into tonight's video. All right, so we are at 25.74% bullish. We had 403 buys, 172 sells, so slight uptick in the bullish percent. Still, like I said, not much there, really just basically a rotation. And we're going to need to get this now above 28% before we'll start to see the next level of any type of trend unfold. And I wish I could, hopefully we get into technicals, I'll find some interesting things to talk about, but I think otherwise we're going to get through this video pretty quick tonight. So slight rotation here, nothing really expected. We're at 25%. Once we get over 28, maybe we can start to get a bit more optimistic as far as further rotation on the short end of the database, which is the short-term models. Let's go ahead and go right into the S&P. All right, so we'll start off with the hourly chart as usual. And interesting, if you folks were watching this thing, those of you have the indicators and saw these, the algos caught this turnaround, this ugly hour we had. My cursor right here is at, and we're looking right at the low. The next hour, the algos all turned up right there, and we've been basically straight up ever since. Now we've got about 6 hours, 7 hours. Looks like, as usual, what's going to happen, we're going to get into the London Open again. We should continue to print up. I don't know if you folks were around to watch London Open last night, but we got a surge right at the open. In fact, we traded the high of the session within the first 2 minutes of the London Open last night. Completely reversed, went from 40, 23, 24, 50, I think was the actual number, and reversed and went down to the 81 level intraday on the US session. So it was the absolute perfect point. The algos caught it really well, and then we once again were seeing these swings, and that turnaround in that last hour was pretty. Actually, the last 2 hours was pretty amazing, actually, and we caught a decent bid on the close to settle the markets today. But there's really, like I said, there's no real feature here, and you're looking at this chart here. It's just sideways, and from roughly the 26th of March right into today, we're in the same range. We've just been chopping around. Moving averages are basically flat. There's, other than this hourly charts, there's not a lot of movement, but typically we'll get at least some kind of cycle where we're cycling up and down. We're not even getting any. We had this one trend over here on the 24th, and since then it's been range bound, and it's been a target-rich environment. If you're an intraday trader, though, you should be able to trade these bounds pretty good. Let's go over and take a look at the daily, and the daily chart is just hovering right above the 10-period moving average. The 10 is right now at the 39.93 level, so we printed just below it intraday yesterday. We printed down to 80.75, and if we look at we're looking at, this is, yeah, the daily, just looking at the numbers here for today. Bear with me 1 second. Let me get the market grid numbers here. Now, market grid is suggesting that we're probably going to stay below the 40 here, and the 40 period is at 40.31 even. That's about 15 handles higher. If we break above 40.31, then there's some potential on the upside. R3 is 40.40, 40.52 on the upside here. Let's take a look real quick here at the models on the S&P and the market grid. So market grid right now, we're showing this is weekly. That's why the numbers look funny. Let me bring up daily. We're looking right now at S1 as 89. I showed you the numbers just briefly on the TradingView numbers are different, and maybe I'll address that for a second, that the data that is being used in TradeStation and TradingView is different in the stream and how they're calculating the nearest futures. I've been trying to figure out what the differential is, but there is some differences in how they're being calculated. And I've had conversations with some of you around the planet that are using TradingView, and we're noticing that there's different values depending on where you are in the planet, actually. So it's not 100% consistent. And I can only tell you that we ran a system many years ago that we had a global server that one was the primary server and everything synced up against. I think what they're doing is actually running not a global server, but they have multiple servers around the planet. They're getting 200 million views per month, I think it is. So it's crazy. There's 30 million customers on TradingView. So I'm not sure what's going on. I would like to dive into that data, but let's take a look here again at so there's slightly different numbers. S1 is 39.81. R2 is 27. We had a 30 handle on the TradingView numbers. So we're looking here at a potential for S1, R2. I don't know that they're going to be able to get anyone to buy into the Deutsche story anymore. I think that's getting pretty old. And in general, I think there was somebody from the FDIC, I think the head of the FDIC was testifying in front of Congress, and they're still digging into what happened at SBV and Signature and the whole bit. But in the end, it's just a few banks, and they're trying, like always, they'll use this situation to possibly change some legislation and maybe adding banks under 250, maybe it goes down to 100. I saw some number, $100 billion banks. Who knows? I think it's more of just trying to get some sort of confidence back in the banking system. And I think in the end that many of us haven't moved any money around to speak of. Money's always moving around from bank to bank. I don't see that as an issue at the moment, but certainly if there's an angle, just know there's going to continue to use this banking story if they can get their hand on it. I think the Deutsche story is going to get old really quick if it hasn't already. I mean, by the end of the session, nobody cared about Deutsche's CDSs, right? So nobody was really giving a hoot about that. So let's take a look at, let's go back to the TradingView and let's go through the algos just a little bit more here. So this very slight slope here, it looks like the algos want to turn back down tomorrow, but they're still slightly positive. But the entire support range that we're looking at yesterday, we hit down to the the SMA 21 was at 39.76, and the PPM's downtick, they're upticking a little bit. So we got a shot and a run at the 30.31 level, which is that 40 period moving average. We get above that, we got a fib target right above that at RXT. We're looking at 40.52 is RXT. Just getting the number here 1 second. That high target number is 40.57 even. And we keep getting rejected from here. Every time we get up here, there's a rejection. But if you look at the last 4 or 5 days, even going back to the reversal day, we've just been in the same range. The reversal day, we printed 40.73 all the way down to 39.66. That was Fed day. And since then, all the closes have been higher than that day. The close was 39.70, and we got a close at 78, then a close at 4,001, and then we just continue to get these closes yesterday, 4,001.50, and now here we are back at 4,016. So look for that 31 kind of pivot. If we get above that, then there's a shot at the 50 handle again. And it's possible, folks, if we can get through that 50 area, that we could print as we come into the end of the week and the end of the month and the end of the quarter, that we're going to get some window dressing, and folks are going to try to figure out where to position as they go forward and we come into Q2. So it's hard to believe we're talking about the second quarter already, but it's upon us. So let's go ahead. I think what we'll do here tonight is we'll get through the NASDAQ. I'm just going to run through everything really fast. Maybe at the end, if you folks have some questions, I'll do a couple of questions. I think I can run through this pretty quickly. All right, NASDAQ is just hugging on this 10-period moving average. If you notice that slope, it's starting to turn down. I talked about this last night. We're starting to lose some momentum, and that suggests that there's a fib target down below. 12,402 is a target here. Whether we can get a rollover, we are seeing the market grid turn down a little bit here, but we still have some positive momentum. The PPM1 is at 0.31, so the market's going to want to hang right around there. If we look at yesterday, the close was 12,732 and 12,726 was the 10-period moving average. Today it's 12,767. Last trade 12,781. So we're managing to stay above there. If we look at the market grid for the NASDAQ, you're looking at S1 12,684, R2 12,835. So it's probably going to be in those ranges, but we are seeing some bleeding off of this positive momentum. So it really, unfortunately, just puts us back into these averages and still into this range. The only difference between this and the S&P is that the markets were able to maintain a higher level. The S&P has consolidated a little bit lower. We're consolidating here at the highs of the range. I'm just going to bring up here just real quick. On a weekly basis, last week's high was 13,082. We'd have to get above that. There is a fib target also at the 13,313 level. So possibly to get up there on a weekly basis if we do get the squeeze I'm talking about. Otherwise, I think we stay in this range. I'm going to give the squeeze a 50-50 chance right now. Based on what we see tomorrow, we might be able to put some better probabilities on the possibility of the market rallying into the end of the quarter, end of the month, and see how that sets up. Stick with the weekly here as we come into the Russell. We've got an inside week building right now. Russell looks like it's going to stay stable. More building of a base in here. So, man, I wish there was something positive to say about these markets. But I'm going to draw this in because this is the story of the markets here completely, is just this pattern. I mean, this is it. Just sideways. You can chop this off over here, and that's your range. I think it looks like right now that we're going to get a little bit the possibility of this starting to move just a touch higher here, where we get maybe we're going to come up and start to break above these moving averages here. But algos are just stable. I can't even put an argument together that they're bullish. They're really not. There's still some downward momentum here. This is the weekly chart that we're looking at. So let's go over to the daily, just get a short-term feel for this. And you can see we're managing to stay above this 10-period moving average here, and just barely. Algos are suggesting really just sideways here as well. This 21 is going to be the key. It looks like it potentially has one more shot here. So we have maybe one more zig in the zag before we can set a pattern that we're going to get up to the 200-day moving average like I was talking about. I just don't see the pattern evolving very quickly here. So looks like another, what we're looking at Wednesday, Thursday, possibly. After that, maybe we can get a little push. Like I said, I'm staying optimistic that there could be something there. Yeah, and I just saw somebody talking about the housing starts. I didn't cover the economy stuff here. I got so bored trying to get ready for tonight. It was pretty bad. So 1 second here. Yeah, I think as we come into, so we've got the mortgage index coming out. That's prior was 3%. I think this mortgage, retail, and real estate is going to do better. Pending home sales is looking down minus 2.3. So I think that number is probably going to come in better. I don't know that it's going to be material. That's really all we have coming out tomorrow. And then if we come into Thursday, we'll have the typical claims and continuing claims and so forth. But markets just look completely flat here, folks. All right, so we'll go to the treasuries. Treasuries managed to continue to move higher here. We're looking at the back above the 200-day moving average here. And it's kind of fascinating what happened here because we basically probably got about a standard deviation beyond this range here. And I've talked about these zigzag patterns. They tend to be bottom. So this is the bottom of the yields. We printed down here to, let me get a low print on that, 3.39. I remember talking months ago that these objectives way over here at 325, 336, that seemed impossible to get to. Well, it wasn't. We got through there earlier in the cycle, and we got this big rally and then back down. So it looks to me yields are getting a little volatile. There's a pivot right here at 3.7 to watch. And I think we stay under that, but if we get above 3.7, then we're going to start to see rates increase on the longer end. And then I think we'll see further of a steepener come into the yield curve as we go forward, especially on the 530s. So this pattern is interesting. Let's take a look at the 2-year, same pattern. Actually, we're just below the 200 here. We're looking at 411. I think we're probably going to move up toward in between 433 and 443 here. We should see continuing move on the upside. You can see the algos on PPM1 are suggesting we're going to stay fairly positive, meaning that the 10-period moving average is at 399 right now. That's going to be your support line. We should manage to crawl up along this line, probably get back over the 200, and the 200 right now is at 411. We're basically right there. Then we should move up toward the upper end of this market grid, which is closer to the 425, 430 level. So it looks to me that yields are bottoming here. This volatility is pretty intense, actually. If you look at this chart just in general, let me collapse it down. You'll see there has been no area where we had as much volatility like we've seen recently. And it makes sense with all the stuff that's went on with the banking system and all the moves the Fed has made, and from dollar swaps to, putting in the the discount window issues that they did. So makes sense that it's there. Once again, that volatility starts to normalize, and we should see, you're already seeing the channel here on the market grid. So it's starting to tighten up. We've already got an upward channel setting up, and I think we should drop right into those parameters that I just discussed. Okay, so next we'll take a look at crude. I've been talking about crude actually expanding in here. Some of these, I'm going to turn some things off here for just a second. I want to turn these fib targets off for a moment. But we still get this 200-day in a downtrend. We traded right into these levels I talked about. 73, 72, 74 was the target range. We moved right in there. Looks like we're going to peak out. What my expectations are, let me just draw this in real quick. What my expectations are is that this is going to basically get into a range here where we're going to see the patterns probably set up along this moving average here and maybe just consolidate. These averages are coming down. Let me clean out a couple of things here. And these averages here are still downsloping, and this is coming up. So what we're going to get is a classic crossover of the moving averages. Typically, we'll get a move like this where there's a channel that will form on a channel will form here on the market grid, where we'll start to get a little bit of a channel here, and then the markets will basically just kind of move in this zone. It's going to be capped off somewhere around here, around this. This should be about 75 level. This possibly we can get up to the upper end range, and maybe this 200-day moving average coming down in here will set up some kind of resistance. But it does look like at the moment that we've definitely got this thing to bottom out here. It was pretty obvious there. I guess Joe and company missed that opportunity to buy those $66 crude oil they said they're going to buy. Maybe they were the buyer. Who knows? Maybe they're smarter than we're giving them credit for. Yeah, I just saw something that Trader SLA. Maybe that's what we'll do at the end of tonight's video. I'll bring up that probability chart. So that'd be maybe a good thing to do tonight since we got a short session. Let's go ahead and move on, and let's go to gold. Gold caught a bid again today. And really what's going on with gold here is we're just climbing this 10. It does look like that we're going to get a break of this second derivative here on ppm1. ppm2 looks like it's trying to break down. So expect gold to come into still looking down at the lower end of the market grid, which is right now around 1945, 1940. And I do expect to see this still consolidate here and move down in. I think ultimately the buy point for the next potential move to the upside will be this 21 period moving average. Right now it's at 1911, and it's going up about $6 a day. So that's going to end up to be that 1920. I think we end up setting up a sideways pattern here, and then that's where things start to look interesting. As I recall, looking at the weekly, we've got this really wide grid that's set up right now. So we need to see that normalization happen here. So it could be 5-6 weeks before gold does anything of any sort back from that standpoint. So just And you can see the algos are also telling us the same thing. They're just not going, they're not expanding, otherwise not indicating that there's more trends. We're starting to see some interesting configuration here on the 10-period moving average on a weekly. So we'll keep an eye on that as we go forward. All right, we'll come into Bitcoin final market, and so we're basically remaining in the range. This is a weekly chart. Let me just blow this up so we can see this chart pretty good here, just the latest action. As I've been talking about, this is weekly. This 10-week moving average is the key, 24,438. That is going up about $500 per week, just rough numbers. So that's going to be the 24.9, call it 25,000, and then 25.5 next week. We should continue to consolidate here around this 200 week and around in this market grid formation. You can see the algos are suggesting that momentum's going to bleed off. Even looking out, we're still, even though you see the downward slope in this PPM, it's still positive, which means that that moving average will continue to be support. So somewhere around 25.5 will be that number. Take a quick look at the daily. This is kind of, if you look at it, this is most likely like leading the gold market here. This is that kind of a pattern where gold is at. It's just setting up this consolidation. You see a nice rounding effect here of the 10-period moving average. You can see that the market, the PPM1, has been losing its momentum. Looks like PPM2 is going to be, just like with gold, that's going to be your primary support number here. This is 25.7. This is going to come into play a little faster. And what's interesting, we're seeing some momentum loss here in the 40. And I'm going to draw something in real quick because this is also understanding the PPMs as well. But what we're looking at here is that the 40 is, you can see it looks like it's trying to kind of roll a little bit. And you can see down here, it's losing its momentum. So it's flattening out. Typically what that will mean from the standpoint of the way the pattern's set up is that you'll get some movement like this where ultimately we end up testing this value here. And that's probably going to be, I'll get the value here in a minute. I can't get to the cursor when I'm on, this freezes the screen, so I can't do anything else but show you this. But this is what should happen, whether or not, if I back out a couple bars here, you know, it's possible just to get more of this, and then maybe instead of this pattern that we're seeing here, maybe it flattens out, but then it starts to roll up again, and these averages start to roll as well. And so what ends up happening in this pattern is that over here, this ends up being the launching point for the next sequence up, right? So if there's going to be another sequence up, this would come from coming into these moving averages, whether it comes all the way down in. Let me do something just so you can see these lines just a little bit better. Yeah, so it would be a little more like this, and then the possibility of over here, and then what would happen with the PPMs, they would start to break through the first, second derivative. That would set up this pattern here. But we've got, just looking at this, we've got another 8-10 days at least. We'll call it 5 to 8 days on this pattern from that standpoint. Okay, folks. I think I will do this. Let's go ahead and I'm looking for something on my other screen. If I can find this graphic, I wish I'd have saw that sooner before. But let me just look here and just see if I can find something here. Just bear with me a second, folks. Yeah, I don't think there's going to be a big rug pull anyway. That would be too easy. That would make just about everybody right, which isn't likely to happen. I appreciate it all. Yeah, just, yeah. I'm looking for something, folks, so bear with me. Just bear with me 1 second here. Okay, so I've got this angle of attack up here. This is not the chart I want. And unfortunately, I'll promise you tomorrow night that I will, that I'll come up and we'll do more of these. But here's the bottom line, folks. When I'm talking about the PPMs and they're at over here, 0.25 is a minimum target range. And this is basically lining up what the probabilities for, if this was an upward slope, it's inverse on a downward slope. And basically all it's saying is when you get to 0.25, that's basically the angle of attack is 0.25. The probabilities now are 6 times out of, we'll call it 6 times out of 10, but 40% probability for it to break through that line, or otherwise 60% probability that it will hold those lines. And right now, just to kind of tie it together with the analysis that I did tonight, is there is none of these numbers. Nothing's at, there are a couple numbers that are 0.25, but all of the daily numbers, everything's in kind of in a waffling range. So there's no real characteristics. And it goes back, and I won't do a full class here, but I will just tell you that way back when, most of you probably weren't on the planet, in 1984, when we were researching this, everybody uses moving averages, and we wanted to know why it would break sometimes and why sometimes it would hold. And sitting there holding your breath, waiting for it to see if it was going to stay above or below, we wanted to have try to put some probabilities. In the end of the day, folks, everything you do in the markets is actually probability based. And I've been a math guy on this market forever and ever. When we come back, this is, back to 1984. It's getting to be almost 40 years from there now. That's kind of crazy. I used to like it when it was 35 years, but anyway, it's getting more. But the point is that all we were trying to do is determine these probabilities. The higher the angle attack to a point, the less of the probability that the market's going to be able to deviate from the moving average or otherwise be able to break it down. So if it has that kind of probability, this is something that I always have talked about for years with anybody that's been close to my work, is if I could tell you that right now there was 6 or 7 chances out of 1 that it was going to hold, and you knew that value was going to hold, well, what would you do at that point? You would buy it, whatever it was, you would buy against that, because that's a 70% probability of win. And virtually almost anything you do, if you get slightly beyond 50%, at 60 to 70%, you don't get much higher probabilities than those. That's a big probability. If you walked into a casino and you knew you had a 60 or 70% chance to win, you'd be in a casino every day. The interesting thing is that's about the odds for the casino, around 60. Their odds are slanted about 66 to about 72% probability that they will, every table, every machine, everything will win. That's what they know. That's why they take those commissions out and a couple little techniques that they figured out to slant those odds toward the house. And that's what I'm telling you. If you get this stuff, you get the indicators, and you can determine these probabilities, it will raise your accuracy in trading, and it will give you a higher probability. So that's what I'm going to do tonight. So I appreciate you guys taking a few minutes out here. Let's go back over to our primary screen. Come back over here. So anyway, lesson for the night. I guess that's good. Hopefully that was helpful. I'm going to find this other chart. I have a really cool chart on the angle of attack. That was not it. So I'll be yeah. Anyway, that'll do it for tonight, folks. Anyway, as always, thanks for watching. Got a little educational piece tonight. Looking at as we trade, get ready to close out here. 4016 on the ES. 4031 is that key number to watch tomorrow. Watch for rejections around that. We've been rejecting. I'm just telling you, there's a sense that we're going to get a squeeze job here somewhere as we come into the end of this quarter. Anyway, folks, have a great day trading. Hopefully you have a good profitable day. I'll see you tomorrow night, same time.